Ladies and gentlemen, good day and welcome to the Q1FY27 earnings conference call of Sunrakshakk Industries India Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Bhalada from Adfactors PR. Thank you, and over to you, sir.
Yes, thank you. Good afternoon, everyone, and thank you for joining us on Sunrakshakk Industries India Limited's earnings conference call for the first quarter ended 30th June 2026. Today we have with us Mr. Saurabh Chabra, Promoter and Director, and Mr. Pratik Arora, Finance Controller. We will begin the call with opening remarks by Mr. Saurabh Chabra on the business operations, key initiatives, and broad outlook, followed by the discussion on the financial performance by Mr. Pratik Arora. After which, the management will open the forum for the Q&A session. Before we get started, I would like to point out that some statements made on today's con call may be forward-looking in nature and must be viewed in conjunction with the risks and uncertainties that we face. A detailed statement and explanation of these risks is included in the earnings presentations, which has been shared earlier with you all. The company does not undertake to update these forward-looking statements publicly. I would like to invite Mr. Saurabh Chabra to make his opening remarks. Over to you, sir.
Thank you, Mr. Vishal. Good afternoon, everyone, and a warm welcome to all the investors, analysts, and stakeholders joining us today for Sunrakshakk Industries India Limited Q1 Financial Year 2027 earnings conference call. We sincerely appreciate your continued trust, support, and interest in our company. I am pleased to share the Q1 Financial Year 2027 has been the strongest quarter in Sunrakshakk's history, further reinforcing our position as a diversified, growth-led FMCG company. During the quarter, we continued to witness strong, broad-based demand across our FMCG intermediates, and edible businesses, which together now contribute approximately 90.6% of our consolidated revenue, up from around 83% for the full year, financial year 2026. This continued to validate the strategic shift we have made over the past couple of years from a textile-led business to an integrated FMCG dominant platform. On the manufacturing front, we commissioned a new soap line at our existing Roorkee facility during the quarter, adding approximately 1700 metric ton of monthly capacity. This has taken aggregate installed capacity for FMCG and FMCG intermediate to 20,840 tons per month now, from 19,640 tons per month as of Q4 financial year 2026. This expansion, together with the continued ramp-up of our Guwahati facility and the ongoing scale-up of our edible portfolio out of Bhilwara, further strengthens our integrated pan-India manufacturing platform, spanning soap noodles, detergents, personal care products, home care products, toothpaste, cosmetics, spices, and savory products. Our manufacturing network across Bhilwara, Roorkee, and Guwahati, combined with a customer base of over 200 customers, continues to provide us a strong foundation for future growth. I would also like to briefly touch upon the broader macro environment during the quarter. Continuing geopolitical tension kept crude oil and crude-linked derivatives price volatile through the quarter, which fed into input costs, packing material, and supply chain planning across the industry. This had a more pronounced impact on our textile business, given its higher sensitivity to such input and material cost movements, though our FMCG and FMCG intermediate businesses were not entirely insulted either. That said, we remain confident that our integrated manufacturing platform, diversified product portfolio, and expanding operational footprint position us well to navigate this environment and capture the long-term growth opportunity that India's FMCG sector continues to offer. As shared earlier, our medium-term aspiration remains to achieve approximately 1,000 crores in revenue by financial year 28, with a target revenue CAGR of 30 to 35% between financial year 25 and financial year 29. We see this as an important milestone rather than as a financial destination, and our focus continues to be on customer and channel expansion, manufacturing and capacity optimization, wallet share and cross-selling growth, product and portfolio expansion, and deepening our distribution reach, all while maintaining disciplined execution and capital allocation. With that, I would like to now hand over the call to Mr. Prateek Arora, who will take you through our financial performance for the quarter. Thank you. Over to you, Prateek.
Thank you, Saurabh sir. Good afternoon, everyone. I will briefly take you through the company's financial performance for Q1FY27. Q1FY27 was our strongest quarter to date. Consolidated revenue from operations increased by 120.64% year-on-year to rupees 276.33 crore compared to 125.24 crore in Q1FY26. On a sequential basis, revenue grew by 39.85% over 197.59 crore in Q4FY26. EBITDA for the quarter increased by 94.41% year-on-year to rupees 22.59 crore compared to 11.62 crore in Q1FY26 and grew by 12.16% sequentially over Q4FY26. Profit after tax grew by 130.67% year-on-year to rupees 15.04 crore compared to 6.52 crore in Q1FY26 and increased by 24.30 sequentially over Q4FY26. Basic EPS for the quarter stood at 4.85 compared to 2.41 in Q1FY26, an increase of 101.24%. On margins, our FMCG segment EBITDA margin improved to 8.55% in Q1FY27 from 7.90% in Q1FY26, reflecting continued operating leverage in our core FMCG business. On a consolidated basis, EBITDA margin for the quarter stood at 8.18% compared to 9.28% in Q1FY26 and 10.19% in Q4FY26. This sequential and year-on-year moderation at the consolidated level was largely on account of higher raw material costs amid ongoing geopolitical headwinds, a trend we expect to normalize over the next couple of quarters. PAT margin for the quarter improved to 5.44% from 5.21% in Q1FY26, supported by continued scale benefits from the Guwahati facility, even as it moderated sequentially from 6.12% in Q4FY26, in line with the EBITDA margin trend. During the quarter, we continued to strengthen our manufacturing platform across Bhilwara, Roorkee, and Guwahati. As Saurabh sir mentioned, we commissioned a new soap production line at our existing Roorkee facility, adding approximately 1,700 metric tons of monthly capacity, taking our aggregate FMCG and FMCG intermediary capacity to 20,840 tons per month from 19,640 tons per month. On a segment basis, our Roorkee facility contributed 27.50 crore from the soap section and 87.62 crore from the noodle section in Q1FY27, compared to 17.63 crore and 44.47 crore respectively in Q4FY26. Our Bhilwara facility contributed 40.98 crore from home care and detergent and 30.34 crore from edible, compared to 32.50 crore and 29.26 crore respectively in Q4 FY26. And our Guwahati facility contributed 26.15 crore from cosmetics and 37.75 crore from the noodle section, compared to 20.91 crore and 26.01 crore respectively in Q4 FY26. We also remain focused on prudent capital allocation and efficient utilization of the funds raised through the preferential issue, which continue to support our capacity expansion across Guwahati, Roorkee, and Bhilwara. Looking ahead, we remain confident about the opportunities before us and continue to work towards scaling our business further, with improving profitability and operational efficiency over the coming quarter. With this, we conclude our opening remark and would now be happy to take any questions you may have.
Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Shravan Modi with Syndicate Family Office. Please go ahead.
Hello, sir. Thank you so much for my first question is, I just wanted to know.
I'm sorry to interrupt, Shravan. You're not audible. Your voice is breaking. Are you on a hands-free device?
Yeah. Am I audible now?
Yes. Please use your handset on the handset mode. Thank you.
Sure. Thank you. No, thank you so much for the opportunity. Just wanted to ask you about how have raw material and crude link input costs behaved during this quarter, and what is the outlook for the next couple of quarters? If you could just compare.
Hello, Shravan, can you repeat the question, please?
Yeah. So I just wanted to ask you, like, how have raw material and crude linked input costs behaved during this quarter, and what is the outlook for the next couple of quarters? If you could just share some inputs on that.
Actually, I would say the crude and textile business majorly impacted by this ongoing situations.
So during the last quarter, the major impact was mainly in the textile business, where the dyes, chemical and fuel prices got high. And accordingly, we couldn't increase the prices for the textile business in last quarter. This is what was the situation of last quarter. We believe that by Q3 or Q4, things will get normalized, because Q2 we are seeing the impact of this situation again.
Does that answer your question, Shravan?
I hope I have been in position to answer the question.
Yeah. Just wanted to follow up on that. So you mentioned political tensions and crude oil volatility as a factor this quarter. Could you please elaborate on the specific channels through which this affected the business, like say input cost, packaging, and or supply chain planning?
So during this quarter, mainly the dyes, chemical, consumables, and fuel for our boiler. Those are the things which got affected, and a part of it, there are few more chemicals which pricing of which is basically linked with the international market, like I can say is the LAPSA and those things. Those are affected in terms of raw material. With regard to packaging material, definitely because of this geopolitical issue, there was sudden spike and hike with regard to the pricing of PP. So the packing cost also had got increased because of that.
Okay, sir. Yeah. Thank you for the opportunity. I'll just join back the queue later.
The next question comes from the line of Mudit, an individual investor. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. First of all, I would like to go for the PAT and turnover for the current FY vis-a-vis the expectation for the next financial year.
So, can you elaborate this a bit? What is the expectations?
Yeah. So, what we can expect, like the PAT and the revenue for the current financial year, and the similar numbers for the next financial years.
So, as we had made the communication in our earlier calls also, that we have an internal target to achieve 1,000 crores of revenue by FY28. The pace at which we are going as of now, we expect that the revenue or top line, we will be closing somewhere in between the 900 to 1,000 mark. This is what is the expectation for FY26-27, and we foresee a growth of around 15 to 20% in FY27-28 over the current year's figure or current year's revenue. With regard to profitability, this year, because this quarter one was affected because of the several and various aspects, still we expect that we will be closing somewhere 6% kind of profitability this year, which we again expect to get improved by additional 0.75 to 1% in the FY28.
Okay. Got it. And on the similar line, how about the capacity utilization and expansion? Like the shared margin, will it remain same or in terms of like if we consider the capacity utilization and the expansions which that are already in the pipeline?
So, almost, if I say, majority of the expansion or capacity increase activities have been completed. There will be some investments or CapEx which we will be doing in the coming period, just to, balance out the production line. Nothing much is expected out of in next 1.5 year with regard to capacity addition. The capacities which we do have, we are just working on the increasing the capacity utilization in next 1.5 years. And therefore, what I said that we are expecting a profit margin increase in profit margin by around 1% in FY28. That will be basically on account of scale of volume or of scale of operation, which will be increasing in the coming period.
Okay. Okay. Got it. Thank you, sir. And how about the working capital?
So,
you people are trying to reduce it or anything on that part?
So as of now, our major focus is on the operations and that front. Working capital, we are already at a very balanced out figure or a balanced out number. But still, if there is any scope which we will be finding in the future, we will work out on that and we will optimize that also.
Again, the textile business, it will continue, or your people are planning to, like, since by the numbers we can check it, that it's not getting much of a profitability. Any plans of demerger or anything? All right.
So as of now, during the last quarter, the number was not good. But internally, we had evaluated and discussed a lot about it. So by quarter 3 this year, we are expecting to get good in textile business also. As of now, we don't have any plan for demerger or that kind of thing. That's what I can say.
Okay. Okay. Thank you. Thank you.
A reminder to all the participants, you may press star and 1 to ask a question. The next question comes from the line of Muskan Patel with JK Investments. Please go ahead.
Hi. So my question is regarding your capacity. So you commissioned a new soap production line at Roorkee facility during the quarter, which added approximately 1,700 metric ton of monthly capacity. I just wanted to understand what was the rationale for expanding this specific capacity rather than just adding a new location.
So, the existing capacity or the earlier whatever capacity we have for soap manufacturing was the same location. So choosing that location is going to definitely reduce our investment with regard to civil and other activities, as well as we are getting almost every customer from that location. So from management perspective, from controlling perspective, from the operation side, so it was very convenient for us also to go for the Roorkee location. So that was the reason we opted for the Roorkee location for installing the another soap production line.
Got it. And sir, one more question. So with the aggregate FMCG and the FMCG intermediary capacity is now about 20,800 tons per month. So what is the current utilization level and how much is the headroom does it provide for the near-term growth that we plan on?
So as of now, we are somewhere 50-55% kind of capacity utilization we are, because the capacities which we added recently, those are yet to be utilized fully, right? Therefore, in one of the earlier question, I said that for next 1.5 years, we will not be needing much of the investment for the capacity or capex. And in near term, by FY28, we at least expect another 25-30% capacity utilization into that.
Got it. Understood. Thank you so much.
Thank you. Thank you.
The next question comes from the line of Aniket Redkar, an individual investor. Please go ahead.
Everyone, and thank you for the opportunity. Sir, I have a few questions. Sir, can you just throw some light on the contribution of the fund that we have raised? So, I mean, out of it, how much is the going for this Roorkee?
So, the fund which we are whatever we are adding in terms of capacity for Roorkee, that is basically from for our wholly owned subsidiary unit. So that fund is being basically utilized from the retained earning of the subsidiary unit only.
Okay. Okay. And sir, how much of the remaining capital is expected to be invested in the further capacity expansion or working capital?
So, whatever investment with regard to CapEx, that has already been done. We don't foresee much of the amount to be invested in with regard to CapEx. With regard to working capital, definitely to the tune of increase in the business, there will be some amount which we will be deploying. But at the same time, we will optimize and we will plan to reduce that also, so that we don't increase our working capital same in the ratio of increase in the revenue.
Okay. And are there any plans for additional fundraising over the next few years?
As of now, we don't have any plan for additional fundraising.
Okay. Okay. And sir, can you just throw some light related to our food and edible segment? Can you give a small update on the Bhilwara food facility, particularly the savories and the spices? I mean, in terms of the capacity, installed capacity and utilization for the current quarter?
So, as of now, in Bhilwara, we have manufacturing facility of spices as well as savories, right? So, currently we are using our plant only for one shift. So, almost we can say if required that we have to increase our production, we have second shift completely free for the same.
Okay. And sir, from the customer point of view, how has the customer acceptance and the repeat order progress in this business?
So basically, we are into the B2B business, right? So,
Okay.
All our units had gone through or passed through several testing parameters of the customers. So, the culture or the business model in our case is that we have a long-term commitment from the customers that they will be associated with us, and they used to place the order on planning. They used to give us the planning for every quarter, and the firm order which we receive is for the next month.
Okay. Okay. And sir, in terms of the margin, what are your expected margin in this food business compared to our soap, noodles, and FMCG intermediate?
So, it again depends. So margins are very different for different product in fact. In food product also, there are different or a variety of margins which we do have for different product. Like for spices, margins are a bit lower side. For savories, margins are on a bit higher side. So that way it is being placed with the customers.
Okay. 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 And sir, one last question. As revenue has scaled very rapidly over the last year, so going forward, how should investor think about the steady state EBITDA margin on the consolidated point of view?
Sorry, can you please repeat it out, because I somehow missed your question.
I mean, on a consolidated basis, how do you see the sustainable? Is this sustainable EBITDA margin on a consolidated basis for the next 2 to 3 years?
So, we are optimizing our value chain and everything, and we will be utilizing our capacity definitely in the coming time a bit more. So, with regard to EBITDA margin, the current quarter number will go up definitely in the right. And with regard to profitability also, we can say that because we are aiming a target of 7% by FY28, so definitely the EBITDA margin will also go up by another 2.5% from here.
Okay. Okay. And sir, one last question. As you indicated earlier, the ambition of reaching almost around 1,000 crore by 1,000 crore revenue by FY28. So based on our Q1 performance, how confident are you achieving this target?
So, this 1,000 crore target, which we initially took, was for FY28, right? This is the performance of Q1 for FY27. We are also very optimistic, and the numbers are very encouraging for us also. So this year, we will be closing somewhere between 900 to 1,000 crore mark.
Okay. Okay. Thank you, sir. Thank you. This is from my side, sir.
Thank you. Thank you.
The next question comes from the line of Krisha Modi, an individual investor. Please go ahead.
Hello. Thank you for the opportunity. So, my question is, which segments are expected to contribute the most incremental revenue over the next coming 2 years?
So in the coming 2 years, the revenue from food business as well as from the soap segment is going to be a bit on higher side for next 2 years.
Okay. And one last question is, looking backwards over the last few quarters, has the overall FMCG strategy delivered outcomes in line with what the management original expectations were?
I think your voice was cracking out, backing a bit.
Okay. Yeah. So my question was, looking back over the last few quarters, has the FMCG strategy delivered outcomes in line with the expectations of your management?
Yeah. So, whatever we have thought of or we have planned, so the numbers and the results are actually in line with what we had expected earlier with regard to FMCG business segment.
Okay. Thank you. That's all from my side.
Thank you.
The next question comes from the line of Chaitrika Deshpande, an individual investor. Please go ahead.
Hello, good evening, sir, and thank you for the opportunity. So my first question is, as the business transition from predominantly textile-led model to the FMCG-led model, what revenue mix do you envision over the long term across FMCG and FMCG intermediaries?
So, in the longer run, we expect that the textile business will contribute somewhere in between 8 to 10% of the total revenue. Remaining 90 to 92% revenue will come from the FMCG segment.
Okay, and sir, one more question I have is, what is the presence of both FMCG intermediaries and finished FMCG products? How do you see backward and forward integration benefiting the margins?
So, with regard to FMCG intermediate products which we manufacture, those products are being used for captive consumption as well as we have the market for that also. Right? So that is one. And with regard to, because the major backward integration which we have done or which we have is for our soap line. For remaining things, we procure the raw material and we process them up to the finished goods stage.
All right, so that's all from my side. Thank you.
Thank you. Thank you.
The next question comes from the line of Divya Reddy, an individual investor. Please go ahead.
Hello, am I audible?
Yeah. Yeah.
Good afternoon, sir. So, my question is that since Sunrakshakk Agro Products is now part of the business for over a year, so how has this integration progressed so far, and how impactful it has been?
So, with regard to Sunrakshakk Agro, it is with us for more than 4-5 quarters, right? The numbers are very encouraging from that company. The numbers are pretty good. The business of the Sunrakshakk Agro is continuously on a growth trajectory since last 3-4 quarters. And with regard to alignment with our main business, so we are very much in sync, and that kind of situation we are.
And are there any key areas that you are still working on? And what would be your outlook for the future, like the biggest opportunities for value creation?
With regard to, I would like to answer your last question first. right? So, with regard to value creation in the coming period, so we are constantly working on various product segments, including few products for food. We are doing innovation into that particular segment, right? We are working on new products which are needed in the market so that we can supply those products to the customer. So those things are we are doing with our current facility. That is point number one. So the another point or the additional thing which I would like to say on this is that in case if we get any lucrative proposition to invest upon or to acquire upon, so we are open for that kind of scenario and situation also. I hope I could have answered what was your question.
Yeah, sir. Yeah. Thank you so much.
The next question comes from the line of Sneha Sharma with HNI. Please go ahead.
Hi, sir. Good afternoon. I just have two questions. The first one being that Q1FY27 was your strongest quarter in the company's history. So what were the key factors behind the strong sequential and YOY growth in revenue and profitability?
So, during last 2 quarters or 3 quarters, we had invested a lot with regard to our new manufacturing facility acquisition. So that is one of the key drivers for our revenue growth. That is point number 1. Point number 2, with regard to the soap business segment, we had added the capacity in Q4 FY26 and capacity in Q1 FY27. So those capacities were being installed, and customer base was also being added in this quarter. So that had led to the additional revenue during the Q1 2027.
Okay. And so your FMCG and FMCG intermediaries now contribute around 90 to 91% of the consolidated revenue, which is up from 83% in FY26. So what's driving this continued shift in the revenue mix?
So the driving factor for this shift in the contribution mix is, as in your previous question also I answered, that we had acquired new units. We had installed new production line, new production capacities for the FMCG segment in Q4 FY26 and Q1 FY27. So the same had resulted into the additional revenue in the FMCG segment. Because if you will see, the revenue from the textile segment is almost at the same level. So whatever revenue which we are getting in the FMCG segment, that is lowering down the contribution of textile business to the total revenue.
Okay. All right. Thank you, sir.
The next question comes from the line of Seema Mishra, an individual investor. Please go ahead.
Congratulations, sir, for your results, and thank you for giving me this opportunity. My question is basically how are you significantly deploying the capital towards the FMCG pivot, and also including the 98.65 crore which has been raised for the acquisition of Sunrakshakk Agro. How should actually an investor assess the incremental return on the capital, and has the newly added capacity ramp up and mature?
So I would like to just clarify one thing over here, that fund which we raised of 98.65 crore was not being utilized for acquiring Sunrakshakk Agro Product Private Limited. That activity had happened prior to the fundraising itself.
Okay.
With regard to application of this fund which we have raised amounting to rupees 98.65 crore, that is being majorly utilized for acquiring the food manufacturing facility in Bhilwara and soap noodle and cosmetic manufacturing facility in Guwahati. So these two are the major segments where the amount was being deployed.
Okay. Also, you're targeting 1,000 crores in revenue by FY28. So could you walk us through the revenue bridge, how much growth is expected from the existing businesses, new capacities, and any new verticals?
So whatever capacities we had increased till now, that will give us a revenue of 1,000 crore by FY28. We will not be needing any additional capacity to accelerate our revenue. Once the capacity utilization reaches to a certain level, thereafter we may think upon or we may think for the capacity expansion. As of now, whatever capacities which we do have, we are confident that we will be achieving the targeted number of FY28 by this existing capacity only.
Okay. And one more last question. I would like to know what are the key milestones the management aims to achieve over the next 2 to 3 quarters?
So the first and foremost thing is that with regard to whatever impact which we had in Q1 with regard to the profitability, so that is our first and foremost target for coming 2 to 3 quarters, that we will be just nullifying the impact of cost increase. That is one of the major things which we will be doing. With regard to another thing, second priority which we do have is that whatever capacities which we added, we would like to utilize more those capacities in the coming 3 to 4 quarters. That's what is the major two targets which we have as of now.
Okay, thank you so much, sir. That answers my question.
Thank you.
Participants, please press star and 1 to ask a question. The next question comes from the line of Mansavi Mukherjee with Oracle Investment. Please go ahead.
Hello. Hi, sir. I hope I'm audible. Congratulations on a great set of numbers. I just had a couple of questions. One of them being that, is it possible to get like a rough idea about the current revenue mix between B2B manufacturing and our own brand products?
So as of now, whatever revenue which we do have is basically the B2B. As of now, we are not into the B2C segment.
Okay. Okay, all right. Yeah, that clarifies. I also just wanted to add on and ask that, do you have any plans to acquire additional FMCG businesses, brands, or manufacturing assets? On top of that, are there any new product lines, categories, anything, or a facility that the company is evaluating over the next 12 to 24 months?
So as of now, we don't have anything in our discussion for acquiring any manufacturing facility. As of now, that is not. But yes, definitely if something comes up which is very lucrative, any proposal comes up which is very lucrative, we are open for that. This is how it is. With regard to additional new products, so we are in the phase of process of developing some more products which we can produce with our existing capacity. Also, we are looking for some opportunity or some products in the FMC in the food sector or food business, which may need some amount of capacity expansion or capex.
Okay. All right. That makes sense. Thank you so much, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Saurabh Chhabra for the closing remarks.
Thank you everyone for participating for today's call, and I really appreciate and look forward for your continued support in future. Thank you so much.
Thank you, sir. Ladies and gentlemen, on behalf of Sunrakshakk Industries India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.